Hello friends, we have brought a new video on Polycab, what a long-time investor needs to know. In this video, we have discussed about the marketing strategies, the business techniques, the monopolies it creates with its competitor. As a long-time investor, we need to research many things to consider a stock in the portfolio. So we have made the research easy and compiled some data in the form of this video. Now, if you want to research with your own self, then you can obviously check in the description box, but at the end of the video. Now, enjoy the video first. Polycab is engaged in the business of manufacturing, selling wires and cables and fast-moving electrical goods (FMEG) under the Polycab brand. It enjoys a reputation for great quality and super durability. It has 12% market share of the total market and 18% market share in the organized space. It has a reputation of being the fastest growing company in the Indian cable sector. Polycab have 25 manufacturing facilities including 2 joint ventures with Techno and Trafigra. In 1964, late Thakurdas Jaisinghani had established Sind Electric Stores, which dealt in various electrical products. In 1996, the company was incorporated as Polycab Wires Private Limited. Later, the company was converted into a public limited company to Polycab India Limited, formerly known as Polycab Wires Limited. The wires and cables industry is the largest part of the electrical equipment industry, accounting for 40 to 45% of the industry. It has a market size of 50,000 crores and has demonstrated double-digit growth over the last decade. The demand for wires and cables is derived from three major sources. These are investments in public infrastructure, private sector, and residential real estate investment. India is going to see a power surge in the coming future due to the sharp GDP and economic growth. There has been a rise in electricity consumption from 620 units per capita in 2010 to 1340 units per capita in 2021, which is nearly doubled, and it is expected to grow at a sharper rate in the coming future. Reports state that India is going to invest a lot in its infrastructure growth. The government schemes like National Infrastructure Pipeline (NIP) and PLI schemes will help sustain demand for wires and cables. NIP, announced in 2019, proposed an outlay of 102 lakh crore to execute over 7,000 projects over a 5-year period, while the PLI scheme is aiming at achieving larger scale manufacturing base in India. All this new development will skyrocket the demand for electrical commodities. There is a huge entry cost and market penetration cost that acts as a barrier in the wires and cable industry. Polycab India have multiple large-scale manufacturing hubs, a strong quality testing team and infrastructure, a pan-India distribution base and good logistics partner as well. As mentioned earlier, all these enable Polycab to provide the shortest turnaround and delivery time. Encompassing all the above factors, Polycab is a leading player in cable business and do also have a solar cable which will benefit in the long run. A positive takeaway is that the country has now resolved to attain carbon neutrality by 2070, and in this context, it is expected that there will be a surge in uptake of renewable energy, including solar cables. The main reasons for a continuous shift of the business from the unorganized sector to the organized sector are: 1. Almost 5 years back, unorganized sector was almost 39% of the total industry. Last year, it was almost 34%, and it appears that it would be close to 26% by 2023. Apart from the better quality of products and service from organized players, other factors like implementation of goods and service tax (GST) as well as policy measures have also contributed to the shift of business from the unorganized sector to the organized sector. The market has numerous players selling products at low price while compromising on quality. This leads to rival companies start lowering their prices to gain advantage over each other. Most of the cable requirement come directly from the contractor who focus on the L1 prices. The biggest challenge of the company face in selling quality products. Company's majority of the business comes from wide network of channel partners such as distributors, dealers and retailers. Also, they help Polycab in making critical strategic decisions by providing direct feedback from the market. For retail partners, they have started Polycab Experts program. As a result, Polycab India Limited has seen its business increase in size over the years, assisted by the shifting of business from the unorganized segment to the organized segment. Polycab India Limited increases its product prices when its input cost increases. However, it did not decrease its prices enough when input cost declined. This practice has contributed to the increased profit margin of the company over the years. However, the cable and wire as well as the electrical good industry are highly competitive. As a result, there are times when despite an increase in raw material cost, it could not pass on the cost increase fully. This is because the company could have lost business if it increases prices further. The company filed returns of its product, that is, the return of faulty products is the lowest in the industry. This happened because it preferred to make most of its product in-house instead of outsourcing them. As a part of its in-house manufacturing strategy, Polycab India invested in a copper rod manufacturing plant as a joint venture with Traffigra. However, soon after the completion of this plant, Traffigra exceeded this business and Polycab acquires its stake to own the whole plant. Over the years, Polycab seemed to have faced challenges in collecting receivables from its customers and dealers. At any point in time, about 10% of its overall receivable are credit impaired. That is, there is a doubt that the company may not collect them. In such a situation, the use of channel financing helps Polycab avoid the credit risks associated with the collection of receivables. This is because in channel financing, the credit risk, that is the risk of loss of receivable, is taken over by the bank. Therefore, channel financing helps Polycab India Limited to receive money fast and prevents the risk of non-payment by customers. As an investor for a company, SWOT analysis is very important. Now, if you want, you can pause the video here and check the SWOT analysis points. It is being said that we are currently on an ICE age, internal combustion engine. With the emergence of electric vehicles, we are slowly getting out of ICE age. The rising fuel cost worldwide, growing air pollution, and increasing consciousness about the environment among consumers has led to a surge in demand of EV vehicles. Major automobile manufacturing companies, both abroad and in India, are focusing on electric vehicles. To support this demand, India requires a huge infrastructure revamp. Having a sufficient network of charging stations on interstate highways before e-vehicles roll out is imperative. Polycab is committed to contributing to this space. Polycab are already manufacturing high-speed charging cables for electric vehicles. These wires would be able to sustain the higher current flow, which would enable fast charging. Along with this, Polycab are well positioned to support the connectivity of the charging station to their nearest grids. Polycab has presence in the EPC business related to design, engineering, supply execution and commissioning of high voltage cabling. The EPC segment of the company is an opportunistic one, and Polycab only undertake projects where cable supply requirement is nearly 60% of the total scope of work. FMEG are consumer electric goods sold through various channels such as retail trade outlets and e-commerce platform. These include products such as fans, lights, luminaries, etc. Over the years, the industry has evolved rapidly with increasing participation of organized players. Polycab entered the FMEG segment in financial year 2014 with the launch of switches and switchgear products. Polycab has scaled up the FMEG segment rapidly, and the contribution of FMEG sales in total revenue has increased from 4% in the financial year 2016 to 12% as of financial year 2021, with revenues crossing 1000 crore mark in financial year 2021. The CAGR in last 5 years has been 37%. The company has over the years taken up various organizational projects with key end goals. Project JOS was a strategic initiative of the company to increase market share in the FMEG segment in a targeted and organized manner. And Project Bandhan, which provide the company a platform to provide sales incentives to retailers and electricians and build brand loyalty. Polycab is currently running 3 major strategic projects. Project Shikhar is a 360-degree program with three main pillars, that is channel expansion, the Polycab Experts program and IT enablement. The company aims to implement it in 300 identified high potential cities across India to drive 3 times sales in these geographies. Project Udan aims to build a lean and sustainable cost structure as well as institutionalize new ways of working. Project Leap is the company's strategic project aimed at achieving a turnover of 20,000 crores by financial year 26. With market share improvements across categories, it aims to sustain the share of export in total sales at greater than 10%, while scaling up the operation margin in FMEG segment to greater than 12%. While analyzing, a major portion of its raw material is basic commodities like copper and aluminium. In addition, it uses PVC, which is dependent upon crude oil. However, when an investor notices the operating profit margin of Polycab, the company has not only maintained its profitability, in fact, it has improved its operating profit margin. Polycab gets a period of 90 days from its suppliers after the purchase of copper and aluminium to fix the final price of purchase. This 90-day window helps the company in reducing the impact of volatile copper and aluminium prices. For example, let us assume that Polycab buys copper on January 1 and the supplier ships the copper to the company without fixing the final price of the copper. If on January 1 the price of the copper on the London Mercantile Exchange is $3 per pound, then it becomes the provisional purchase price for Polycab. Now let us assume that the shipment of copper would take about 2 months to reach the company. In the meanwhile, on February 20, Polycab gets an order from its customer when the price of copper on London Mercantile Exchange is $2.5 per pound. Then, due to the flexibility window of 90 days in pricing, Polycab can fix the purchase price of copper at $2.5 per pound and use the same in determining the final price of cables and wires to the customer on February 20th. It helps Polycab maintain its profit margins. Otherwise, the customer would be willing to pay a price according to the prevailing lower copper prices. In such a case, Polycab would have to incur a loss of $0.5 per pound on the sale transaction. For engineering, procurement and construction EPC business, Polycab generally keeps price escalation clauses in the contracts, which protects it from raw material fluctuation after the project work has commenced. Now, if you want for further reference, you can check in the description box and visit the website as per your choice. Share the video with your friends and comment us on what topic you want to watch the next video. Thank you for watching. Have a good day.